Seems like it's going to be the day after. It was a big sell-off for our markets. In the mid of the afternoon itself, we managed to sink to the day's lows. We even breached the 22,900 print in trade yesterday. Dips up the 22,800 mark yesterday too. But yesterday doesn't seem like an India alone problem. Yes, the FI selling continues, but I think it was all smacking off a big fear of China's competitiveness when it comes to the tech landscape. Europe as well fell, and so did US markets.
You know, I actually downloaded the app just to understand.
Oh, you did?
Yeah, I downloaded
the Chinese
the app.
have your data now.
No, so, and I deleted it because I just wanted to experience, you know, what it is about. I mean, I'm not like a tech expert to really comment on it, but yeah, I mean, I ran a query, and the query gave me satisfactory answers. I just ran one query, but it did have. I mean, somewhere I remember reading that was the most downloadable app in the world yesterday.
Yeah,
that is how this entire deep seek frenzy in a sense had hit the market. So what happened last night? I mean, you spoke about a weak handover from US markets. Indeed, it was a weak handover because just about everything and anything which had to do with deep tech, that got affected. So obviously, Nvidia, the biggest casualty. What Nvidia has lost in terms of market cap, no US company has lost in terms of its market cap in its history in a single day. Then you saw all the other AI listed stocks in US, they took it on the chin. The implications of that were clearly visible in companies which were giving allied services, which is the data centers, they got crunched down. We saw a reversal obviously in NASDAQ, so you can connect it here. Now the question, Aisha, is that large part of the gains in America post-COVID has been riding on AI and productivity wave. Will that get challenged, or this is something which is looking like a threat but may not translate into a real threat? If the productivity AI engine, or if the productivity in US economy gets challenged, obviously it will have implications of growth, it will have implications in the currency, it will have implications in the way how US market move, and it will have implications how the dollar index would move. So for me, for our audience, we should be searching for not the first impact but the second impact. Indian companies will not get affected because of DeepSeek, Indian IT services will not get affected, AI businesses will not get affected. We have to search for the second derivative, which is dollar index, what will happen to US positioning, the bloated big tech stocks. This was overdue, Aisha, frankly. This kind of a market cap would have not continued. But the point is that when the fall comes, it hits you, and it hits you hard.
Yeah, and I think, the question that everyone's talking about is that DeepSeek managed to launch a language model for under $6 million in a span of just 2 months. So it's the cost and the speed that's sort of challenging the big boys, the likes of ChatGPT, OpenAI, and what have you. So why is it that others need such high capex for similar models? And I think the world is questioning that, and which is why that big sell-off in big tech. And yeah, it challenges the norm of huge investments in artificial intelligence development per se. And also, I think the usage of chip, which is why you had that kind of crash that you did on Nvidia as well. One of the most revered stocks of 2024, if I can call it that. So that turned out to be a little bit of a wake-up call. Of course, Trump spoke on DeepSeek as well, and he said that the release of DeepSeek AI from a Chinese company should be a wake-up call for our industries, that we need to be laser-focused and competing to win. He said, I've been reading about China and some of the companies in China, one of the particular coming up with a faster method of AI and much less expensive method. And that's good because you don't have to spend as much money. He says that I view this as a positive, as an asset. He said we've always had the ideas, we're always first. So I would say that that's a positive, and that could be a very much positive development. He said, so instead of spending billions and billions, you'll spend less and you'll come up with hopefully the same solution in a lesser span of time. So yeah, I mean, legitimate concerns and legitimate learning as well.
So Aisha, this entire AI ecosystem which has got created, which is dominated by big tech, and then there are startups which are associated with it. So the question what is AI? AI is ultimately a tool which will impact and influence productivity. Very simple. Whether you call it pattern recognition, whether you call it implications of voice, recognition or language tool, it should increase productivity. Productivity increase will come at a cost of implementing AI. If the Chinese model is able to implement that same level of productivity at 1/10 the cost, then obviously this entire ecosystem will get challenged. That really is the big point which you and me have flagged off. Now, what it means for the world, of course, this AI system could be challenged in terms of cost until unless US is able to come up with something better, innovative, which I'm sure they would, because innovation is the name which keeps you forward here, and US is the land of innovation. But in the near term, Aisha, what may happen is that this is a very crowded trade. Nvidia, Microsoft, or perhaps the US big techs. If we see this kind of a relentless selling in some of the AI-dominated stocks, could this lead to a natural unwinding in US markets, and could this lead to unwinding in other markets also? So where do we stand here amongst this mumbo jumbo? Let's understand what it means for us. We've gone down independently of what is happening in the world. And today, if you look at it, SGX is actually up, even though the handover was bad. Now, if the US markets, they fall in a measurable manner and then they stop falling, that I think is a great outcome, because you don't want US markets to keep extending a rally, because that is bad for emerging markets like India. The best outcome is that US markets, they follow in a measured manner, and that automatically will ensure that we get a back in, or we get a floor in place for India. That is how I look at the situation. What you don't want is that you don't want to be hit from US markets, and you don't want to be hit from local sentiment. Right now, it's the local sentiment which is hitting us, and globally we are not getting hit. But you don't want a situation of double compression. So the best outcome for us is, which is what it appears today, that US markets have fallen in a measured manner, and perhaps you got to take it from there. I think the word bear market, I've not used the word in a while actually, is now daunting at us. Now you fall 20%, technically you slip into bear market. And the small cap index, which was like the darling, or which has been the darling of the market, suddenly is on the verge of slipping into a bear market. And Nifty is now looking better than the small cap index, because the small cap index from the top is down 17, mid cap is down 15, the bank Nifty is down 12, and Nifty is down 13. So in this fall, the bank Nifty is outperforming by a sliver, and the small cap index is 3% away from slipping into bear market, but the Nifty is good 8% away from slipping into a bear market, and the bank Nifty is a good 10% away from slipping into a bear market. The point I'm trying to make here is that it is the small mid cap end of the market which is getting smoked. They were bloated. Nobody wants to buy. There has been a reset button which has been pressed because of the excesses which have got created in the market. And this is not the time when you can say that, I'm just going to buy the fall here. What market history has taught us, that right now, if you own small and mid cap stocks, it's time to ask yourself one simple question: why do you own that stock? What is the time horizon you have? And are you ready to digest a 15% volatility? If you bought any stock in the small and the mid cap space, just because it's been a, tip in a lift, please get out. You'll have to digest that bitter pill and say that I'm going to take a loss. But if your time horizon is 3 years plus, if you understand the company, if valuations are okay, I don't see a problem there. The problem with this market is that now compulsions are at play, which is compulsions of risk management, this whole fear that, I wish I would have sold earlier, and those factors may just linger along for some more time. So there is just like one shoe does not fit all. There is no way anybody can come up with a strategy. You'll have to understand your own strategy. But in general, I think the safety or the store of value, I think, is in large cap. They've fallen less. They are the first ones to bounce back. And within the small and the mid cap space, I worry that more than the earnings or the environment, it is the sheer ownership which perhaps could keep some of these stocks in a disarray.
If you like this video, then like, share and subscribe to ET Now.